Artificial intelligence stocks are everywhere, but are we witnessing a bubble ready to burst, or the greatest opportunity of our lifetime? Let's dive in. The AI stock market is buzzing, companies are soaring, and everyone is scrambling to get a piece of the action. But why all of a sudden hype? Be honest, is your portfolio singing with AI excitement? Or are you just trying to figure out if this is all one big, scary movie trailer? We're breaking down the excitement with a friendly, simple approach. This is the core question. Is this just inflated enthusiasm waiting to pop, or are we truly on the ground floor of a massive technological and financial boom? First, let's simplify. What exactly is an AI stock? It's not just a company that says AI a lot. It's any company whose core business, or a massive part of its growth, depends on artificial intelligence technologies. Generally, these companies fall into three simple buckets: those making the chips, those building the software, and those collecting the data to train the AI. Unlike past tech fads, AI is different. It's not limited to one sector. It's transforming healthcare, manufacturing, finance, and everything in between. This wide application makes its long-term potential massive. Now, let's talk to the skeptics. They look at the rapidly rising prices and say, wait a minute, this looks familiar. Here's their argument for why this could be a bubble. Many AI companies have crazy high valuations right now, which means investors are paying a lot of money for earnings that might not appear for years. It's the scary graph where the stock price goes vertical. They point to history, specifically the dot-com bubble. Back then, many companies had huge potential but zero profits. And when the hype faded, many of them vanished. History loves to rhyme, but will it repeat itself? But hold on, the believers see a completely different picture. They argue that this isn't just hype, it's fundamental change. Let's look at why this could be a billion-dollar opportunity. The market potential is truly enormous. Experts project AI to add trillions of dollars to the global economy over the next decade. We're talking about restructuring entire industries, which drives massive, sustained growth. AI is already saving companies time and money. Think about drug discovery, customer service, or factory automation. These aren't abstract ideas. They are quantifiable improvements driving profits now. A key strategy is the picks and shovels approach. During the gold rush, the surest way to profit wasn't panning for gold, but selling the tools. In AI, this means investing in the companies that supply the chips, infrastructure, and tools everyone else needs to build AI. So how do we separate the genuine, long-term opportunity from the temporary hype? It comes down to smart analysis and avoiding FOMO. Focus on companies with sustainable competitive advantages. Do they have proprietary data, unique software, or a massive, locked-in customer base? These are the defenses against competition. Look for real revenue and growth, not just cool marketing videos. The hype machine can put a funny filter on anything, but only real profits stand up to market storms. In conclusion, AI stocks present a complicated landscape, but understanding the difference between genuine innovation and market mania is your biggest superpower. The potential upside is enormous, but so is the potential for volatility. Treat AI stocks like any new groundbreaking technology with cautious optimism. Remember, do your homework, understand what you own, and never invest more than you're comfortable losing. Happy investing, and may your portfolio be powered by intelligence.